Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 22nd, 2025, and we're diving into Moody's Corporation's latest earnings report for the third quarter of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Moody's performance, especially given the impressive results they've posted this quarter.
Revenue and profitability overview. Let's start with the top line. Moody's reported a net revenue of $2.0 billion for the third quarter, which is an 11% increase compared to last year. John, can you shed some light on this growth?
Absolutely. The revenue growth is driven by strong performances in both Moody's Analytics and Moody's Investors Service. Analytics revenue grew by 9%, while Investors Service saw a 12% increase. This reflects the company's strategic investments and favorable market conditions.
And what about profitability? How did Moody's perform in terms of earnings?
Moody's reported an adjusted EPS of $3.92, which is a 22% increase from the previous year. This was driven by significant operating leverage and margin expansion, with the adjusted operating margin increasing by 510 basis points to 52.9%.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $3.70 for Moody's, based on a survey of 8 analysts. How did the actual results compare?
Moody's exceeded expectations with an adjusted EPS of $3.92, beating the forecast by 22 cents. This outperformance is a testament to their robust business model and effective cost management strategies.
And what does this mean for investors?
Beating EPS forecasts typically boosts investor confidence, indicating that the company is performing better than anticipated. This could lead to positive market reactions and potentially drive the stock price higher.
Operational efficiencies and future outlook. Moody's has shown impressive operational efficiencies this quarter. Can you elaborate on their operating margins?
Certainly. Moody's operating margin was 45.7%, with an adjusted operating margin of 52.9%, up significantly from last year. This improvement is due to disciplined cost management and strategic investments that are yielding high returns.
And looking ahead, what is Moody's outlook for the rest of the year?
Moody's has raised its guidance for the full year, projecting an adjusted EPS between $14.50 and $14.75. This reflects their confidence in continued strong performance and market conditions.
Capital allocation and shareholder returns. Let's talk about capital allocation. How is Moody's managing its cash flow and shareholder returns?
Moody's generated a free cash flow of $1.8 billion this quarter. They've declared a quarterly dividend of 94 cents per share and authorized an additional $4 billion in share repurchase authority, demonstrating a strong commitment to returning value to shareholders.
What impact does this have on investor sentiment?
Such actions typically enhance investor sentiment as they reflect the company's financial health and its ability to generate and distribute cash effectively.
Key takeaways. In summary, Moody's has delivered a strong performance this quarter with significant revenue growth, an EPS beat, and robust cash flow management. John, any final thoughts on Moody's investment prospects?
Moody's continues to demonstrate resilience and growth potential. Their strategic initiatives and strong financial metrics make them an attractive option for investors looking for stability and growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Moody's performance in the comments below.